this video we are going to cover Fibonacci. There are basically thousands of Fibonacci things, but we are going to focus on only two things, that is Fibonacci retracement and Fibonacci extension. Before covering Fibonacci, we just need to cover something that is supernatural, and that is known as phi, also known as the golden ratio. You might have heard about the golden ratio, and its value is 1.618, and this is the approximate value. And I would like you to write this thing down anywhere. Most important ratio, which is a reverse of pi, which is 0.618, also known as 61.8%. I would like you to write this line, anything, most important ratio, and I'll show you why this is the most important thing and in just a minute. So what is golden ratio? This is basically an out of this world thing, and you can find this ratio 1:1.618 in almost everywhere. You can find this number everywhere. I was reading a blog where it states where is the golden ratio and Fibonacci can be found. These terms are in ratio of 1:1.618, right? Let's just scroll down. You will see some amazing things now. Golden ratio in Great Pyramids of Giza, they are in golden ratio topography. Our Google is in golden ratio, so it is in 1:1.6. It is golden ratio has been used in the design of Google right out here. You can see that. There are many articles. You can just see www.goldnumber.net. If you want to read, you can read this blog. This is amazing. You can see Leonardo da Vinci. So his photograph, this painting is in the proportion of the divine proportion, also known as golden ratio. This Da Vinci and divine proportion in art composition. Toyota brand, that is in the golden ratio, and this UN secretary in building, that is in the golden ratio. And you can see these Pepsi and all these products are made in golden ratio. The Aston Martin James Bond car, this is in golden ratio. So there are thousands of millions of things. Stock market analysis, phi and golden ratio sequence. This thing is what we are covering. At all, I want to say that this number, these supernatural, magical numbers, they work in technical analysis too. Let's just now cover what is Fibonacci. So we talked about the golden ratio. Fibonacci numbers are similar to this golden ratio. They are derived from a formula, and they are derived through the golden ratio. So there are some numbers like 0.5, 0.618, 0.789. So there are some numbers which we will be talking when we will cover the live practical part of this thing. So we'll be covering that, and whenever stock moves, it respects that level, which I will explain you in some moment. Before covering everything, first of all, I would like to tell that if you combine Fibonacci with momentum indicators such as stochastics, and MACD would be, I think, the best. MACD seems to be the best to me. So if you combine it with some momentum indicators, you can get almost 100% sure entry and exit points of a stock. Let's just see. I would like to first of all explain the ball theory, which might be most of you would have covered till now. You would have heard this thing. Let's say we have this ladder, right? This steps right out here. We have a ball right out here, right? This is a ball, and if we throw this ball, how will this ball fall down? Is this ball gonna fall like this in a straight line, or this ball will go ahead and fall like this? Probably the second one is the right option, right? This ball will come down due to gravity, but this ball will come on this step, it will bounce back, it will come on this step, it will bounce back, it will come on this step, it will bounce back, this step bounce back, this step bounce back, this step and bounce back, and then on ground. Now the thing to understand in this whole situation is this bouncing back of ball this is where we are going to make our money. We are going to make money from this bouncing back of ball. Think the situation as of the stock market. This is a stock which is in its downtrend. Now, do it fall in a straight line? Never. Whenever a stock is falling, it falls down, it gets some support, and with that support it starts rising. It gets some resistance, and then after some resistance it start again falling, and it break the earlier support, which now becomes resistance. It is seen maybe this might go ahead and bounce back to this resistance, but it never crosses the resistance because the trend will reverse. So it bounce back. Stock also come down, then it go back, it stock again fall, get a new support, and it get a new resistance. It can never it get a resistance, it can never exceed it. It just go back down, it gets a new support, it again start rising, it gets a new resistance. It falls down, get a new support, it gets a new resistance, fall down, gets a new resistance, and finally it falls. And then maybe the trend will reverse like this. Will the trend reverse like this? No. Okay. Trend will reverse like this. It'll move up. Let me change the color. It'll move up. It'll get some resistance. It'll start falling. It'll get some support. It'll again start moving, and it'll break the resistance. It'll move up. It'll get some support. Again like this. So if a if a stock is in uptrend, it will move like this. It will always fall at some point, and then it will start rising again. So this falling of the point, this thing right out here, this thing right here, this thing right here, this thing here, and this thing right out here. This is the phase when we can make an entry, and we can expect to get some profits out of this market. Now Fibonacci tells us that at which level, at what is the almost exact price this fall will get stabilized. It might get some resistance or support depending upon the situation. Let's just take a practical example so that you can understand. Before that, I would like to clear one thing. There are basically two things. One is Fibonacci retracement, and another is Fibonacci extension. Now the thing you have just seen in that ball example is retracement. So retracement tells us where and up to which point this stock might get some resistance or support. It tells us that where to enter in a position, whereas extensions are reverse of resistance. They tell us where to exit a trade, where we should exit a position. We'll talk about extensions later videos, but let's just go ahead and cover this retracement.